US has decided to stop the world and get off. And I don't see why the rest of us have to do that.
The world has changed and Trump's tariffs are not just a phase. That's Sir Keir Starmer's assessment this morning, and the government says they're speeding up their growth plans as a result. The US President Trump told America to hang tough in the face of falls in the market. The White House also says that more than 50 countries have reached out for trade talks since Trump's tariffs announcement. What impact could all this have on our economy and the wider economy? Andrew Murphy is CEO of The Entertainer, the toy retailer. He said the biggest worry about the tariffs is uncertainty.
When we think about the potential for, in The Entertainer, for purchasing perhaps more goods from China, perhaps at a better price, if one assumes that US retailers won't be buying as many of the goods that have been produced, and therefore they might be available at clearance prices at a lower price, then one has to factor in what's the impact on shipping availability and shipping rates going to be. How long will the product take to get when it wasn't already planned in to be moving from China all the way to the UK? There are different safety standards that apply in the US to the UK, and so we have to put toys through the safety regime. And so while there may be an opportunity for businesses like The Entertainer to produce even better prices for our customers in the UK through picking up some excess stock, I come back and end where I started, really just a huge amount of uncertainty. And it will be a number of weeks, I think, before we have any clarity at all. And that, of course, assumes that we don't have moving goalposts in the US in the meantime.
Yeah, and that's not much of an assumption, is it? So Howard Davies is the Professor of Practice at the Paris Institute of Political Science and former chair of RBS, former Deputy Governor of the Bank of England. We can speak to him now. Howard, good morning to you.
Good morning.
How worried should we be this morning as markets wobble? Are we staring down the barrel of a global recession, perhaps?
Yes, I think so. It's always dangerous to interpret the markets because they tend to exaggerate moods. But I think at the moment we've got sufficiently significant moves that we have to accept that things are going bad. That the reaction that there could have been to Trump, which was, well, we'll all get round a table and we'll negotiate, that's not the reaction. The reaction is that he is serious, he keeps saying he is, and therefore that global trade is going to decline one way or another, and that is going to lead to probably to a global recession, and we will not be immune to that. We can't be.
Is this the end of globalisation, do you think, Howard?
Well, I don't think that's a very helpful thing to say. It's a rather US-centric interpretation. The US has decided to stop the world and get off, and I don't see why the rest of us have to do that. So I think that what we should be doing instead is seeking to accelerate discussions on free trade or at least low tariff regimes elsewhere. Of course, the biggest thing would be to get back alongside the European Union, look at the customs union, etc. I think that would be, for me, the best direction of travel, rather than throwing up our hands and saying globalization, which has benefited the world massively for decades, is all over. I think that's a very pessimistic and US-centered version of what's going on.
If there were no politics involved, would you say something like rejoining the customs union of the European Union would be a sensible economic response to this?
Yes, I think it would. I mean, it's an easy thing to say and quite complicated to do, because you do need to re-stitch a lot of relationships which we spent a gleeful few years tearing up. But nonetheless, I think that's the direction of travel. Whether it is the customs union as it currently is described, that would need to be negotiated. But certainly the direction of travel of trying to get back into as free a trade arrangement with the European Union would seem to me to be an eminently sensible response.
Do you think we have to work on the premise that we're not going to get a deal with the US? I mean, that figure that we quoted this morning, 50 countries, according to the White House, are trying to have emergency talks with Donald Trump. Well, even if he had a preternaturally large concentration span, which of course he doesn't, he's not going to be able to manage 50 separate negotiations anyway. It feels like the idea of a deal with the US feels somewhat distant at the moment.
Yes, it's been a sort of mirage on the horizon for a very long time, and we've always found it very difficult to get it over the line. There are big issues like chlorine-washed chicken and hormone-added beef, which the US keep raising, and we find that difficult to deal with. So a comprehensive free trade agreement I suspect is beyond us. Now, it may be possible to agree certain things in relation to perhaps to automotive tariffs that we could improve. But as you say, there are a lot of people bidding for this. And also, of course, one has to note the secondary consequences, which would not necessarily be resolved even by a free trade agreement with the US. As your previous interviewee said, the risk is that because the US is closed to some people, like China, then product gets dumped to us. Now, some people may benefit from that, but other people will absolutely suffer from it. So I don't think even a free trade agreement with the US, which, as I say, I suspect is not going to happen, that wouldn't resolve the disruption to global trade that this set of measures has created.
How bad would dumping be? Because in the short term, it would give us lower prices, which would be anti-inflationary, which might be a good thing. But it would presumably eventually push out British manufacturers, of which there aren't very many to begin with in the first place.
Yes, I mean, I'd be relaxed about toys from China because I'm not aware that we make any of those. So that probably would just be a net benefit. We'd just get them more cheaply. But things like electric vehicles, that's a bit more tricky. And if you suddenly had a very serious wave of electric vehicles from China at very cheap prices, you can then get into a position where you knock out your domestic capacity and it's very hard to get it back. So I think the government would have to respond to that. And obviously they are tinkering a little bit with the electric vehicles regime today, which may be helpful at the margin. But that's what I think you've got to look at.
One big domestic context today is the rise of national insurance on employers. Came into effect yesterday, so into effect effectively today. How significant an impact on the economy will that have, do you think? Is that a major factor in everything?
Well, it ought to be priced in, of course, because we've known about it for more than 6 months. And so, it would be odd if it were to have an unexpected impact. It's not helpful because it is taking costs out of, taking money from businesses and reducing employment. But I can't quite see why it should be a lot worse than we expected. And people have had 6 months to plan for it.
And just before you go, you were around in 2008 when there was a huge financial crash. How optimistic are you in that context?
Well, this isn't the same thing. I mean, you can look back at 2008 and you can see that the global economy was running too hot and people had borrowed huge amounts of money. And then when the markets turned because of the excesses in the US mortgage market, then a lot of people were left very, very exposed. And the famous Warren Buffett phrase at the time is only when the tide goes out, you see who's swimming naked. That was very clear. And a lot of people were swimming naked. I don't think that's the case now. Most people have got their Speedos on. The market was not before this really racing away. People weren't excessively leveraged, I don't think. So I do think we're facing a different kind of recession. And looking back at 2008 is probably not the right way to interpret what's going on today.
Wise words, Howard, and really useful to have your perspective today. Thank you so much for joining us.
Thank you.
He is Sir Howard Davies, the Professor of Practice at the Paris Institute of Political Science, former Deputy Governor of the Bank of England.
Well, at 8:15, let's get an update on the latest on the FTSE 100, which has opened this morning around 15 minutes ago and has fallen sharply. Our business correspondent, Dominic O'Connell, has been watching that. Morning, Dom.
Morning.
What do we make of this? It's down 5% at the moment. It opened, I think, 6% down. Some people suggesting it could be the worst opening since the pandemic, I think. In the context of what we've seen more broadly, how worried should we be about this?
Well, we're in the middle of a proper global stock market rout now. The FTSE is now down just under 6%. That's about 3 times worse than had been indicated by futures trading overnight. Similar pictures on the 2 big European markets, the German, the DAX index and the CAC index in France, where the trading in shares in French banks has been halted, which is a very unusual step by the market authorities to stop those share prices falling further. They want a more orderly market. And similar things have been happening in the US over the past week. So this is now a pretty big market move. If you look at the US markets, which are, after all, by far the biggest bit of the world stock market, they're about 60% by value of the world stock market. They fell by 11% over 2 days last week. There's only been two other times where they've had a double-digit loss in 2 days, which was COVID-19, the global financial crisis that Howard Davies was just talking about, and Black Monday way back in 1987. If they fall by what we think they will fall, the futures indicate today, we'll be officially in a bear market, i.e. 20% fall. What does all this mean? Well, if you have money in the stock market through your pension or through individual savings, then you're worse off this morning if you take the snapshot of where the market is. The US market is particularly important. About half of all UK pension savings are in the US stock market or in US government bonds. So people who have flooded into the US because of the extraordinary performance of the US stock market have lost money on the back of this. All these markets are pricing in a global recession.
And you mentioned something there, a market halt. Can you just explain to people what that is and what that is in the context of it's happening in Europe at the moment? Is that something that we should watch out for more widely?
Well, I would be very surprised if it happened here, but normally European stock market regulators are a bit more sympathetic to the idea of disorderly markets and things falling too quickly, particularly when it comes to important companies like banks. And we saw it during 2007, 2008, where when it came to financial services companies, the stock market regulators would put a temporary hold on trading in order to prevent very fast falls, to let people just have a bit of a think about things. So the French market authorities have done it this morning. I wouldn't expect it to last very long, and I think it's a bit of an outlier. I'd be very surprised if anything similar happened here. It is interesting to think about what what happens next, though, because talking about trade talks, in the cases of some of these countries, they don't have much to offer Donald Trump in the way of concessions. Vietnam, for example, which got whacked with huge tariffs because it has a huge trade surplus with the US, it doesn't have much in the way of tariffs on US imports. So what are they really going to offer in these trade talks? The other big thing to watch is what happens to interest rates in the US now. If the US economy does fall into recession, there are likely to be interest rate cuts and inflation. It could all get very nasty for the US economy.
Well, we'll keep an eye on that throughout the morning here and, of course, throughout the day on Times Radio. Dominic O'Connell, our business correspondent, thanks for that.
He called it a proper market rout. We're trying to calibrate our language, aren't you? But I think this is not looking good, and it feels like it's sort of accumulating, isn't it? It started with the Asian markets overnight, a proper market right now in the European markets, and then the American markets will open later on this morning, our time. So we'll keep an eye on all of that as we proceed throughout the morning here on Times Radio.